Hello and welcome back to the ILM Realtor Podcast. I'm your host, Tabetha or Tabi, Klein, a realtor here in Wilmington, North Carolina. If you're new here, this show is all about real estate in Wilmington, the market, neighborhoods, and the real-life steps of buying and selling, plus insurance, title, everything in between. Most people don't realize what their insurance policy doesn't cover until they need it. Today, we're talking about coastal insurance, wind, flood, hurricane, and the questions you should be asking before you close on your home. So this is one of my colleagues, Madison Williams. She is with My Carolina Insurance, and she is here today to talk to us about all things coastal insurance. Hi, Madison. How are you today?
Tabitha, I'm good. Thanks for having me here today.
So I have a few questions queued up. But let's start with who you are and how you started with My Carolina Insurance.
Yeah, so my name is Madison, and I'm a personal lines insurance agent with My Carolina's Insurance. I've spent over 10 years helping homeowners protect what matters most while making sure that they truly understand, what their coverages are.
I feel like that's huge because depending on the weather, this is a pretty big deal.
Yeah, definitely. I do feel like taking the time with each customer or client to make sure that they understand what their coverages are, what their deductibles are, what they're looking at is extremely important in the insurance field so that they, feel well protected as well.
And so you are a local. You were a UNCW, yes?
Yes, yeah. So I went to UNCW actually for recreational therapy. I worked at a insurance agency that was local here, and a former boss, he encouraged me to get my license. While being an insurance agent definitely wasn't my childhood dream list, I really saw the opportunity that was there and decided to pursue a career in it.
So it's been something you've been doing for a really long time. So one of the things that you had mentioned was that getting the right coverage and getting a good price generally go hand in hand, but not always.
Right. So, the cheapest policies often can become the most expensive ones when a claim happens. So my priority is education so clients feel confident and protected long term. And I sleep better at night knowing that I've offered the right coverage to the customer. So it's definitely one of my priorities.
That would sit with me real yucky.
Yeah. I don't like going home stressing about something that I've written.
Exactly. And then the most important question I think that I'm going to ask of the entire episode is, please tell me about your puppy Jet.
Yes, so he is my little clear cream Dachshund. To say he's spoiled is an understatement. So he's got a lot of personality in a small little body. He loves to fetch, and he really is the sweetest.
I have a borderline problem with puppies. I have 2 dogs and 3 cats. I just really like fuzzy, snuggly. Somebody needs to snuggle me in the
that's like
ball.
a miniature golden retriever.
They are. I love Dachshund. Now we're going to get into some meat and potatoes. The ILM Realtor Podcast is really focused on, I want to make sure that everybody understands what they're really getting into. So a genuinely basic insurance package that you guys would offer, what does that really cover?
Yeah. So, your standard homeowner's policy is typically going to cover your home itself, your personal belongings, liability coverage to protect you if someone gets hurt on the property, additional living expenses if the home is unlivable due to a covered loss, other structures as well, like a detached garage, a shed, or a fence. It's designed to protect both your property and your financial responsibility as a homeowner. Most standard policies are called what's a homeowner's HO3 policy, and your other structures coverage, the loss of use, the personal property, they're usually a percentage based off of what coverage A or your dwelling coverage is.
Okay. So more expensive house, more expensive policy.
In most cases, yes, just because your dwelling coverage is going to be more, but it can depend sometimes if the year built, if it's a newer home, usually newer homes might have a better rate than an older home, but generally, yes, just because of the cost of what we're insuring that home for.
Yeah, that rings a bell because when we were in Maryland, we built a new construction home, and it was code in Maryland for them to have sprinkler systems in the house. And then I called the insurance company and they were like, you've got a sprinkler system, your rates are going to be lower. And I was like, hey. So what is like the most confusing thing that you get asked by clients? Like they don't understand blank.
I would say one of the biggest misunderstanding in homeowners insurance is that it covers everything, and it doesn't. Flood is one of the really big exclusions is flood is never covered in a homeowner's policy. It's always going to be a separate policy. Wear and tear and maintenance issues, those are something that's also not covered in a homeowner's policy. It's designed to cover sudden and accidental losses. So with wear and tear or maintenance issues, those are something that have happened over a long period of time. And that's going to be, the responsibility of the homeowner to make those repairs or replacements and not the insurance.
Yeah. So if a crawl space has been damp for 10 years, that's not an insurance claim.
Right. That's something that has not happened, suddenly or accidentally. That's happened over a long period of time. And that's going to, fall on the homeowner's responsibility to make sure they're making these repairs and checking these things out to prevent, that damage from happening.
So we talked about how flood never covered, but then there's like the wind, which sometimes is hurricanes, sometimes is tropical storms. And then in Wilmington, sometimes we just have really bad thunderstorms, sideways winds, thunderstorms, but it's nothing named or specific. What about situations like that?
With our agency, our policies are most of the time going to include that wind and hail coverage. There will be, some companies that will write the homeowners and then the wind and hail on a separate policy.
I did not realize that moving to North Carolina, that wind and hail could be a completely separate policy and sometimes more expensive than the homeowners.
Yeah, a lot of independent agencies like My Carolina's Insurance, a lot of our companies will include that wind and hail where you'll just have two separate deductibles. But a lot of captive agencies will write the homeowners and then separate that wind, which can get pretty costly sometimes.
So tree falls down, giant thunderstorm, homeowners. Tree falls down in a hurricane, wind and hail. Is there any gray area?
Sometimes with the homeowner's policy that includes wind and hail, you'll see two different deductible options. And most of the time you're going to see the two separate. One will be like your all other peril deductible. So that's going to cover for losses such as fire, lightning, theft, or smoke. And then you'll see a wind and hail deductible. And that's going to cover wind and hail, tornado, any hurricanes. Or you might see where it's a named storm deductible and then an all other peril deductible. And in that case, your named storm deductible would be any named storm, like Hurricane Florence, Hurricane Matthew. Once it becomes named, then you're subject to that named storm deductible. And then your all other peril would then be fire, lightning, theft, smoke, or hail, tornado. Anything that's not named would fall under that part.
And I think that I saw when I was doing mine recently that with that named storm, there were different price points based off of percentages. Can you explain that a little bit?
Yeah. So most of the time, also with either the wind and hail deductible or the named storm deductible, it's generally going to be a percentage based off of what your dwelling coverage is. So let's just say you have $400,000 in coverage on your home. If you have a 1% wind and hail deductible or a 1% named storm deductible, it's a $4,000 deductible. If it's a 2%, you're looking at $8,000 deductible. And that's your out-of-pocket expense before the insurance company is going to pay out on the claim.
Gotcha. And then 1% would cost a little bit more than a 2% deductible because it's less.
Yes, generally, yes.
It's more out of our pocket.
Right. Generally, the lower the deductible, the higher the premium.
One of the questions that I actually had is, what does replacement cost versus actual cash value mean for the average homeowner?
So replacement cost means your insurance pays what it costs today to repair or replace your home or belongings without factoring in depreciation. Actual cash value factors in age, wear, and tear, so the payout is usually lower. For most homeowners, replacement cost, provides far better protection. And most of the time, if you do have that homeowner's HO3 policy, the dwelling will have that replacement cost. That's already a replacement cost policy. But one thing that most agents should be factoring in on the quotes is an endorsement that is personal property replacement cost. And so that is going to give you replacement cost on your contents. Just for an example.
TVs, clothes, things like that.
Exactly. And for an example, let's say you have a house fire and, one of the items is a TV that needs replacing. At the time of loss, they're going to give you what it costs to replace that TV, for today. It could be $3,000. If you don't have replacement cost on your contents, at that time of loss, you have actual cash value, then it's going to give you a depreciated amount. So that $3,000 TV, you may get $300. So it's really important.
Yeah. If somebody's listening to this and they want to know which one they have, that would be in their current insurance documents.
Yes. Yeah. You'll usually see, like I said, the homeowner's policy it has replacement cost on the dwelling coverage already, but the contents, your personal belongings, your furniture, all of that, that's usually going to be an endorsement that they should be adding on. And it'll say personal property replacement cost.
I feel like that's mission critical because
Yeah.
I can't imagine if there was a fire and I was like, hey, I need all new clothes. I need everything new in my kitchen. That's thousands and thousands of dollars that you
Yeah.
could be out of pocket if this is just, oh, I didn't. And it's one of those things like if you don't think about it ahead of time or know about it ahead of time,
Right.
this could really bite you on the back end.
Right. It's definitely one of those, sometimes there's where, someone's tight on ratios or whatnot and they need to, lower some coverages. Usually we try to do like higher deductibles if that's the case, but the personal property replacement cost is not one I ever recommend removing to save because it really doesn't save you, overall.
Those things where it's like, we're nickel and diming here for something that's really going to be a needle in your side.
Exactly.
We messed this up. That's great. That's such a good one. So let's pull back a layer on a myth that seems to float around. I was actually just talking to the CEO of Coldwell Banker the other day, and we were talking about needing 20% down on a house myth, and that's not really the case. This myth would be specifically for insurance, which is if I'm not in a flood zone, I don't need flood insurance. True or false?
That's 100% false. And first and foremost, everyone is in a flood zone. Flooding can happen anywhere, and a large percentage, come from properties outside that high risk flood zone. It is about the risk and not necessarily your zone. X zone is generally going to be your non-lender required zones, but X zone doesn't mean no risk. It's just a lower risk. So people get this big misconception that, if you're X zone, you don't need flood insurance or, you're not in a flood zone. I try to quickly let people know that, yeah, you are in a flood zone because if it rains, it can flood. And look at Hurricane Helene that we had in 2024, what it did to the mountains up there that a lot of people thought
That
they
was
didn't
so
need
bad.
flood insurance. A lot of them were probably in an X zone area. So it doesn't mean that you're not going to have any flooding. It just means it's a lower risk. And typically, if you have a mortgage on the home, they aren't going to require you to have the flood, but it is optional.
Yeah. So if there's a hole in the roof from a windstorm and the inside of the house floods, is that also considered flooding or is that different?
That's different. Flood is going to be rising water coming from the ground outside up into the home, like storm surge or heavy rain. Water damage is going to be covered under your homeowner's policy. It usually applies, to a sudden or accidental issue. And it's like a pipe burst. So if you had a pipe burst in the home, that's different than a flooding outside coming from the ground up into the home. So those are two separate ones and two different policies for that.
Yeah. In Maryland, we had basements a lot and the basements would flood, like water seeping in. But that again is different than, or a hot water heater would burst and then you'd have this much water on your floor. We don't really have basements here that we have to worry about, but flood insurance is still mission critical. How should buyers start the flood insurance process? Like, where do they go to see if they need it? Is it just a phone call to you? How do they educate themselves on what they think that they might need?
Well, most of the time, if there is a lender or, a mortgage on the home, typically the lender will let them know if they're going to require the flood insurance. And if not, we can take a look at it and see what zone they're in. I would say to do that pretty much once you ideally are under contract to start the flood quoting process, just because any flood policies have waiting periods and lenders, they are going to require that flood coverage before closing. Definitely start the process as early as possible and just try to make yourself aware of, flood being separate from the homeowner.
Yeah, when I think of flooding, I think downtown Wilmington, like down by Front Street. I think Carolina Beach.
Yeah.
And I think king tides. So all of that would be river water rising flood insurance.
Exactly. Yes. And a lot of times too, so let's say you are X zone and you decided you did want flood coverage, we can, write that flood policy the day of closing and you won't have that 30-day waiting period. Or with some of the National Flood Insurance Program or some of our private markets, they do have a 10 to 15-day waiting period. And so if you do at the day of closing, you can waive that waiting period. Otherwise, let's say you close today and then tomorrow you wanted to get flood insurance, it's going to have that 30-day waiting period or that 10 or 15-day waiting period on it.
That's super good information to know. When you say X zone, what does that mean? Are there different tiers?
Yes.
I mean, it makes sense that there would be, but what are they?
So the zones are X, X500. Those are all going to be your X zones. There's AE zone and VE zone, which VE zone we like to say is very expensive. It's usually going to be
That's good to remember.
your very, very expensive beach properties. So usually that's a lot of, your beachfront or beach properties in general. AE zones are going to be some beach properties as well. That's in AE zone. Houses that are closest to water, like rivers or stuff like that, will mainly be your AE zones as well. But the zones you're looking at, VE zone, AE zone, those are going to be lender required. So if you have a mortgage on the home and it's one of those two zones, the lender is going to require flood insurance. And then X zone is going to be your non-lender required zone.
Okay. So that's just a personal, it makes you as a homeowner feel better, but the lender's not worried about your house floating away and needing it to be paid off.
Right. Yes.
Awesome. That's such a good question. I did not know that. I remember when I was doing the real estate exam, there were different types of insurance, HO3 versus HO4. And then there's a completely different one for condos, right?
Yes, HO6.
HO6, that's what it was.
Yeah. The way the HO6 covers, it can cover one or two ways, and usually the bylaws will give us a better understanding of what the homeowner is responsible for. So usually it's an all-in policy. If, let's say, there's master insurance covering the exterior, then the homeowner is responsible one or two ways. If it's all-in coverage, then they're going to be responsible for any betterments and improvements or personal property. And then if it's from the studs out, then the homeowner is responsible for the walls in. So flooring, cabinets, light fixtures, their personal property. So that really helps us decide how much coverage they need.
When we talk about condos, do we also talk about the hurricane, the wind and hail? Is that still something that gets attached, or is that generally under the master policies?
Nope, that's usually something that they're going to have under that condo policy as well. What you might see, let's say that they are in a AE or VE flood zone, sometimes there will be master flood insurance covering that exterior too. But you would still, at that point, it would depend sometimes on the lender if they're going to require for the walls in, but you would still need coverage for that walls in for flooding as well.
Yeah, that makes sense. If the wind's bad enough and then your door blows in, you're still
still the same,
coverage for whatever gets damaged.
Right. With the condos, you're still going to have that same coverage that as far as fire, lightning, theft, smoke, wind or hail coverage in the policy. It's just it really depends. Your dwelling coverage is really what you see, probably a little lower because you're not covering that whole entire dwelling itself.
Gotcha. So what are the first 3 questions any buyer should be asking of their insurance agent?
I would say, number one, do I have enough insurance to rebuild my home if it's destroyed? This helps buyers understand that insurance is based on rebuilding costs, not the purchase price or market value, and they understand what their coverage is. Number 2, I would say, what are my deductibles? Because a lot of times the insured might not understand what their deductible is or, how much out of pocket expense they're responsible for before the insurance covers. And so let's just say you do have a pipe burst in the home and you can have someone come out there and give you an estimate first. And let's say you have a $2,500 deductible and they tell you, well, it's $1,000, to fix this. You'll know that it's not worth filing that claim because it doesn't exceed that $2,500. So if you really know those, it kind of helps you have a better understanding of what your responsibility is before insurance would cover. Number 3, I would say, if something happens, how do I file a claim? Knowing who to call, what steps to take, what to expect ahead of time can make a stressful situation a little easier to navigate and helps avoid delays or mistakes during claims. Everybody would naturally just go into panic mode. And if you have your policy number, your claims phone number, all of that information, that's one less stressful thing you have to worry about during that situation.
I feel like I hear this a lot. This used to freak out my dad, where he had this huge branch of this tree fall on his house. And he was concerned that if he filed a claim, his insurance rates would skyrocket. Does that have merit?
Most of the time, catastrophic claims like a hurricane or tornado does not generally have a surcharge or impact. Now, a fire or theft claim or water damage claim could potentially impact insurance. So some companies have a limit on non-catastrophic claims that they'll take, and then some also do surcharge for those claims. So it really can depend, and it does, most of the time our carriers have a 3 to 5 year look back. So that's one of our questions we'll ask: have you had any claims in the past 5 years, just so we can make sure we factor that into which company we're looking at.
Are there any other big key insurance nuggets? I like to call it like little nuggets for the people of Wilmington that they should be really aware of, have it on the tip of their brain when they're looking at houses or when they have decided, yep, it's time to write an offer.
I would say if it's an older home, to question updates. Like the roof, if that's newer, the water heater, the HVAC, all of those things can matter when we're looking at which insurance company we're writing with. And I think that's huge for the homeowner to know as well, because if those things have recently been replaced, they should be good at least for a number of years, versus if they move into the home and you've got a 20-year-old water heater, they may be replacing that pretty quickly. So knowing those updates, hopefully the realtor will also kind of guide them to if it's required for them to have flood insurance. But yeah, I would say those are some of the bigger factors to pay attention to as far as the home being older. Newer construction, we don't run into those issues obviously as much. So
if you could give the adults of Wilmington one adulting tip of what they need to do, double check, whatever, this month for their insurance purposes, what would it be?
I would probably say review your coverages, review your deductibles, especially your wind, flood, all of that, replacement costs, because a quick review can save you major headache later, especially with it being the new year too. Some people might have gotten new jewelry over Christmas or a new car. It's a good time to review everything. Make sure your policy's covered for those items or updated with the replacement cost of those items. So just knowing what coverages you have, knowing those deductibles, like I said, it's really going to save you a headache down the road if there is a claim. And hopefully there's not, but that's part of the insurance. So,
great.
Expect the unexpected. Yeah.
The most important question of the day. We will button up and finish our podcast with asking, beach day or boat day?
I would probably go with boat day, especially when the weather's nice, and just living here on the coast, there's nothing better than being out on the water, with no real schedule and good company. And, most importantly, little Jet gets to go with us. So I really love the area around here, and I love getting to go out on the boat. I think it's one of the nice perks about living on the coast.
Oh, well, we'll have to meet up for a boat day, and I'll bring my Goldens, and we'll have like small, medium, and large.
Yes.
Running down the beach together.
He doesn't have any little friends, so all of his friends are bigger, so he would love that.
He has big dog energy. Well, Madison, thank you so much for coming on the podcast, for giving us your knowledge and information. It is mission critical when we're talking about homes and what is protected and what's not. I appreciate you so much.
Yeah, thank you so much for having me. I enjoyed it. So
thanks again for tuning in to the ILM Realtor Podcast. And thank you to Madison Williams with My Carolina Insurance for coming on and sharing her little nuggets of information so we can feel more educated as buyers looking at the market here in Wilmington. Next episode is a really special one. I'm interviewing the CEO of Coldwell Banker's Seacoast Advantage. With over 50 offices between North Carolina and South Carolina, Tim Milam has an incredible pulse on the market. And so we talk about what we need to be doing as buyers, what we need to be doing as sellers, and what's happening here in Wilmington compared to some areas. Thank you again for tuning in, and I hope to see you around our perfect little city.